Just a quick sound check for everybody. Just let me know that you're hearing me both on YouTube as well on the Zoom meeting.
I hear you.
I can hear you, sir.
All right. How's everybody doing?
Yeah, hi Bob, fine. All
Yeah.
good.
I got sound now.
Just a quick sound check for everybody. Just let me know that you're hearing me both
Trade
on
Station's
YouTube
keeping me
as
honest
well
right now.
on
It
the
won't log in.
Zoom
They're
meeting.
having system problems. I guess in the last couple of days between TOS and Trade Station, there's lots of stuff going on in the world. It's not even high volume, right?
Yeah, hi Bob, fine. All
Yeah.
good. I got sound now.
Just a quick sound check for everybody. Just let me know that you're hearing me.
Trade Station's keeping me honest right now.
All right, folks, we're going to get started in just a couple
problems.
minutes. And looking forward to today's session. We're going to try to do a couple things a little bit different than what we have.
It's not even high volume, right?
Yeah, hi Bob, fine. All
Yeah.
good. I got sound now.
Awesome. Trade Station's keeping me honest right now.
All right, folks, we're going to get started in just a couple minutes. And looking forward to today's session. We're going to try to.
I'll be back in just a couple minutes. We'll get started.
It's not even high volume, right?
Yeah, hi Bob, fine.
Yeah.
I got sound now.
Trade Station's keeping me honest right now.
All right, folks, we're going to get started in just a couple minutes. And looking forward to today's session. We're going to try to.
I'll be back in just a couple minutes. We'll get started.
It's not even high volume, right?
to mute the Zoom volume so I can listen.
No,
to
that's
WaveTech, but I
okay.
wasn't sure.
That you should hear on YouTube now. I am so sorry. Man, I muted it when I left, so yeah. So you guys didn't hear me slamming around in the room. Anyway, just a brief synopsis of folks that are on YouTube is the messaging system is where we're going to be putting the market grid coming up. There's going to be probably about 50. The plan is for about 50 markets to be reported in here, and then ultimately we're working on some real-time messaging using a Twitter, a protected Twitter account that you have to get signed into. I'm working on a couple projects here, but this in communicating, if you're a subscriber, you want to basically be able to do
probably about 50. The plan is
about 50 markets to be. You want to be able to communicate to us. You use this feedback button, bug request, symbols, all that kind of stuff is where you want to be as far as the communicating to us. If it's really long, then you'll probably want to send us an you can send us an email, and we're working on. We got a bunch of stuff we're working on. We're still piecing together the puzzle, and so we can make sure that we are communicating to all of you as well. I was not able. This is just some house cleaning. While a lot of folks are coming in and are getting all the newbies up to speed.
We got a bunch of stuff we're working on. We're still,
we're going to the cryptos are coming in. The market grid will be coming in the message log area. So we're expanding things, and I'm looking at this possibility of this thing that I had built for TradeStation last week, and the ability which to put out real-time hits on R1, S1 alerts that would be Twitter-based, actually. And we did this before, and it was pretty effective. So I'm just kind of recapping. I know I already said that for those of you that are on the on YouTube and didn't hear me.
Looking at this possibility of this thing that I had built for TradeStation last week, and the ability which to put out real-time hits on R1, S1 alerts that would be Twitter-based.
So we're getting background noise I'm hearing on the YouTube, right?
So I'm just kind of recapping. I know I already said that for those of you that are on.
It would appear that way. I still can't hear it on my end, but Zoom's dominating the audio. But that's yeah, we're getting a lot of people saying that there's echoes.
Okay, let me know if the echo's away. I'm sorry. This is a new system we're using. Yeah, there's two of me talking. Wonderful. That's very annoying. Thank you. One of these days, I'm going to become a pro at this stuff. It's the world of COVID. We're all isolated to each other. So is it still doing the echo?
Yes, it is. I can hear the echo. I just got audio there.
I have no idea how to get rid of this. Hang it. Bear with me 1 minute, folks. How about now on the echo? Is that better? Loud and clear now. Okay. Yeah, I would agree, Petra. One of me is more than enough. You are correct. There are several people on this planet that would agree with that. All right. So, yeah, anyway, I see a question. I apologize to the YouTube folks. I had muted that out, but we should have clear sound now. Okay, good. Okay, sorry about that. We'll get all this stuff worked out. Yeah, so WaveTech is a complete quantitative process that allows you, it covers 16,000 symbols. It's got ability to build portfolios and build your own mutual fund. And what we're going to be talking about today is building those mutual funds. So I got enough of the preliminary stuff. So let's go ahead and start digging in. Yeah, definitely an evil X. Yes. Okay, so so you've all seen, many of you have seen this screen before, and what I'm going to do is walk through some elements. Today, what I'm going to do is I'm going to bring up a spreadsheet. The symbols, Jay and I have been kicking around getting this process going again. We're just kind of looking at it. We kind of got our hands full. I know we had like several hundred new people come into our models this month, so on top of everyone else, so it's been pretty hectic, but it appears that we're hanging in there, right, Jay?
Yeah, trying to. Yeah, we're hanging in.
Yeah, we're keeping the balls up. There's some others in the background as well. All right, so one of the keys to this program is having an in-depth research available to you, which I'm not going to be talking about at the moment, but we're going to stick strictly to building a portfolio. I'm going to bring in a constituent list. I want to talk about considerations, other elements that are going to be important. I'll probably bring up elements of our old website as well, and we'll go through a bunch of things, and just trying to bring in a perspective of how to build a mutual fund. And you can build it with as many stocks as you want. And if the issue that is out there right now, and we're also working on that, is to get the trades automated so that you can click a button and pass in the trades, tell it how much money you want it to manage, and it will figure out how to do that. There's several steps that are working in the background. Yeah, I just saw Jonathan Klein's comment on the YouTube channel. Said, FYI, California may have to cut power to 6 million people Tuesday. It warns it may not need to shed 2,700 megawatts. Yeah, anyway, I miss California and I don't miss it. We lived there for quite a few years. But anyway, building a portfolio and building, what I want for the public to be able to do is to build a very strategic, and both on a short term, I mentioned this on the opening comments, the folks on YouTube didn't hear it, but I want you to be able to build a short term and long term portfolio, and you can even mix them together. Then ultimately someday we're going to introduce you to the Portfolio Expert platform, and you're going to be able to do all three within one on the same symbols. It's we call it dynamic direct indexing, and that is absolutely needs to be automated to be able to do it. You would be going crazy, although if you're making money, you probably wouldn't mind putting the orders in. Yeah, so WaveTech, what it does, somebody's asking a question on YouTube, that what does it do? It basically puts out trade signals, and in the case if you build a portfolio, it'll actually tell you how much to buy, when to buy and sell, how much cash to have. So you build a constituent list. So if you have time, hang around, and we're going to be building that here very, very quick. But and then you put all of the orders into your broker. And the plan is to build a routing tool that will allow you to hook up with your broker and just pass the orders off through. Actually, the fantasy at the moment, it's not a big one, is to be able to go in and have the module look at your cash balance or look at your account and determine how to allocate out the strategies right into your account. And the theory would be that you would ultimately have a complete portfolio, or what we called a personal mutual fund. A lot of mutual funds only have 90, 150 stocks, you can easily build one of these things. And it's way better than most of the stuff you're going to see out there. But it does require you to pick the constituents, which is what we're going to do today. And I'm going to take a leap of faith and grab some symbols from a spreadsheet that haven't been updated for a year. I just want some random stuff. I'm not going to cook the books and make sure I got all the perfect trades and all that. We're just going to build a strategy, and we're going to talk about maintaining it, how to walk it forward. And that's my entire goal for today, as to the initial construction of a portfolio or personal fund, and then some maintenance ideas, and also some considerations of how you might want to put this thing together from the standpoint of the constituent list and the strategy and the style box and all those types of things. Now, for about 20 years, we taught a lot of advisors how to do this, and we're already seeing, and we've only had this product out to the public now. This is the third month. This is 2.5 months, actually. And what's interesting about it is amazing what you folks have figured out. And we've got a lot of folks, and I've mentioned it twice, was unable to put it together, but I'm working on putting a email group out to, we already have a group of power users, and we're going to start an advanced group. I thought it would happen this week. It's going to be next week. There's a couple things that I've been bogged down with in the background to get that done, because it's literally going to have to take another 1.5 hours of time and focus and preparation. So we'll be getting that out there. But anyway, so you have research built in. Every symbol has transparency. A lot of you know this. And as I mentioned, when the YouTube folks couldn't hear, you can go to our portfolio expert site, and that's expert without
without an E.
Yeah, without an E. I'm just going to bring it up. That's why I pause there. So you go to portfolioexpert.com, and it'll come up, and you go to support WaveTech Training. So even if you haven't bought it, you can go here and watch these videos. You can see what it's about. There's a course there. You can also scroll down, and you can see the individual understanding things, and it goes through some things. And building WaveTech portfolios 101 is there. It's about 35 minutes. So you could spend about 1 hour and 15 minutes watching all these. And then we do these meetings every week, and absolutely works with a Mac. Yes, it's a browser-based system. No problem with that. So it's very easy to find out what it's about. I know we had a really nice daily trade we did on Tesla, and it got out, and then Tesla blew up, and we got back on the pony again and riding that horse. So it's very responsive on certain models, and this is the 11th WaveTech training show we've done. So there are whatever 11 times about 2.5 hours are. There's 25 hours plus of videos out there on the channel you can go back and watch. And I know the first couple, maybe 2 or 3, there was some really good content. And one of the things we're going to be working on is going through that content and grabbing things that I worked on and demonstrated before, and grabbing sections out of those videos and making a compilation of all of them, which will be very, very positive from that standpoint. So anyway, that's what that's all about. So we'll go. So if we go back, we're going to go back to the PowerPoint, and this is the basics of what we need to do. There's a step-by-step wizard. We're going to go through this in a minute, but WaveTech's a modeling tool. It's an end-of-day modeling tool. It doesn't do day trading. It's not trying to do day trading. It does short-term models, which is daily holding periods, 35 on average, 35 to 50 days. And on the intermediate, it's roughly 180, about 240 holding days, or a better part of a year. That's typical holding. Markets roll over, something happens, it'll get out when it needs to get out. You'll see that as you go through the product. And those of you that are watching and considering, the good thing is that we prorate. It's $97 a month, and we prorate it by a day. It's basically $3.12 a day. So you can get in for about half price. You can use it for like $50, or you can wait another week and sign up and spend a little money. And then at the first of the month, it auto bills you again. There's no trial, but that's how we did it to just to get folks in and get accustomed. And we found the reason why we didn't do a trial, by the way, is we found if you didn't have any skin in the game, you had a tendency not even to look. So at least if you got 30, 40, $50 or more in, you're gonna at least think, hey, I need to look at that thing, and that'll be enough to get you engaged. And I do suggest, if you do come on board, that you spend at least 2 or 3 months and really come to these meetings, work on it, interact with us, the videos, all that stuff. That's going to help a lot. So back to the portfolio basics is what we can do here is we have a step-by-step wizard, ask you questions, and then all you have to do is fill in the blanks. It's karaoke for portfolio building. And then we're going to build a back test. We automatically set it for a 5-year back test, so you can get an idea how the models responded to the symbols you did. Some of the things I'm going to show you here in just a few minutes is how to control what constituents are in the models and how they're going to work. So this will be somewhat interesting. It's going to be very high level, but I'm going to talk about some basic concepts of how to do these things. And I was digging through some old videos the other day, and it was about, it was about 11 years ago, so I'm a much younger man. I looked really good. I always say I don't want to turn the clock back. I would like to turn it back about 11 years. But anyway, I went through some really good techniques there on some of this stuff, and I may just re-release those videos. It's the same product. You got some of it is talking specifically to the advisory community that we have served for 20 years. So bringing this into the public and giving you the ability to do these things is some of the terms won't be the same. Instead of advisor, it could be user, but that's something I'm considering. But what we want to do, and I saw one of the most ridiculous things I've ever seen in my life. I think there's some firm that's a fintech. They sell things to advisors. It's called Riskalyze. And the guy one of the founders was telling all of their followers on LinkedIn the other day that alpha doesn't mean anything. It's all about taxes. You just tax efficiency, buy and hold, and tax efficiency. To forget alpha, it doesn't. You can't create it. And I mean, talking about a bunch of lemmings. I should have a picture of lemmings jumping off a cliff. It's just ridiculous. Some of the jargon that goes on in the so-called professional community. And I still do business with you. So if you're online, I still love you guys. But, it's those that are using our process already know this is BS. So, but this is the kind of stuff that if you have advisors, that's who you're being subjective to. There's a large part of the community, like 90%, that they're just lemmings. They all think the same. They do the same. And they're salespeople, and that's okay. Salespeople are good, but we're talking about managing and actually creating alpha here. That's what we want to do. We want to create alpha, and the only way you can create alpha is to become very disciplined. And I talked about this before. An old definition of discipline is that it's stuck in my head from way back in maybe the 90s when I used to teach trading to individuals. I talk a lot about the discipline is becoming submissive to a state of order or a set of rules to bring about a desired result. And I always used to ask traders when I would get in with them, said, so tell me, what's your process? And they go, oh, well, I look at this, and they get a really good setup. They get in, and then usually they had a terrible exit strategy. Everything after they got in the market became subjective. And this is why, just going back to those days, I built this first model of this first prototype of this product was built in 1996. And it was actually called VisiPort. And the very first iteration was all the concepts are there. They've been refined, and then when we get to the portfolio expert process, there's another layer of refinement on top of that, and we're working on yet another refinement to bring in for one purpose and one purpose only, is to create alpha. If you don't create alpha, what are you even bothering for? That's like, if you want to create some sort of value above what S&P index is going to do, or whatever you're following. These, as we all know, there's a few stocks that are driving all of the market. We see it every day. The Nasdaq, and we know the stocks. Apple at $2 trillion. I remember when it was a big deal when they went to 1 trillion. Now they doubled again. But all of this stuff that we're talking about here is about generating some sort of alpha. So I'm going to take you through this process here in a minute. And those of you who haven't seen this, I'm going to go through some screens that we've done before. Then we're going to start building some things, and we're going to go into detail in talking about considerations for a portfolio. And yeah, like I said, I even need to redo all of my old videos, or I need to just release them and you replace the word advisor or your firm with user. We'll figure it out. But there's some really good content that I have built, and I've looked at them, and I wish they were more retail based, but they're fine, I think. But all of this stuff, what we're going to talk about today, is how many stocks to put in your personal fund. And the good news is, if you have a custodian / broker dealer that is capable of doing fractional shares, then how much and how many aren't that important, because you can make the pie fit. And that's what that's the goal is. In the old days, let's say pre-fractional shares, we had to make sure we had enough money that we could split the stocks down into a percentage that there were enough shares. Junk shares like Berkshire and some of these things that are $30,000. Those things are pretty much worthless in this kind of system, and they're really a mutual fund anyway. And everybody already knows how I feel about Warren. I don't dislike him as a person. I'm not as big a fan as some folks are. But anyway, this whole concept here, it's on the screen. I'm not going to read the PowerPoint for you, but it's really about building it, constructing it, coming up with concepts. Ultimately, when you're ready to deploy it, you're matching orders. Then you're going to update the constituents. Otherwise, you're going to have a dynamic list of symbols. It's not going to be a static list. You could do static, but normally what I'm going to show you today is the concepts around actually doing and updating the constituent list. And that's part of maintaining the process, making sure that there's a review process and those type of things, understanding reports, and 7's redundant, building and maintaining. That's what this whole thing is about. That probably should have been the header of this, is building and maintaining. One of the other things that you need to be careful with, and this is always important, especially the techniques that I'm going to show you here, is understanding what we call the duration of the current buy in the symbol. Now, WaveTech is a long only process. It does not go short. So all the portfolios are going to buy or sell, and it's going to determine, based on when we build a portfolio, how many of the symbols that you share in the constituent list that you put into the portfolio manager. It's going to look at those, determine whether they're trending, which one to own, and it's also based on some settings that we're going to go through in a minute it's going to show you it's going to tell you exactly how much to put in each one. So you're going to have when to buy and sell, how much cash to have if things get really risky, like they did in February of this year. We actually, as I won't go through those details today, but we actually did start to go to cash on January 21st of this year. Our models were already selling all the way through February. And then, of course, the first week of March, it dumped out a lot of stuff. And there were a lot of portfolios that went to 100% cash. And literally from that point, within 30 days, a lot of those symbols were coming back in. And but what I'm going to show you in a minute, this is a perfect time to show you. And we'll go through some of these considerations, as this would be probably about a 6-hour course to go through everything. So I'm going to try to just go through it methodically without skimming over anything. I've been thinking about how's the best way to teach a serious class in this. So this may end up being titled, phase 1. So, but you need to understand, like when I show you a list, we need to look and see, does the system already own the symbol that I'm about to put in a portfolio? How long has it been held? And you can see here on this scale, this is a holding day. So if we're in the first 50 days, there's another consideration here. And I need to make a note to myself, because every time I show this screen, I think of this. But what I'm going to do is there's another consideration, not just the amount of time holding, but how much of the trade has been realized. So if we were looking at WaveTech right now, and we looked at an individual symbol and it had an open position, it not only tells you when to buy and sell, but it tells you what to expect from that buy. And it tells you how many days it's likely to hold, what the percent returns are going to be. It gives you a price target. It tells you what your average risk is. So it's setting up a real setup on every symbol that the system puts out to you is actually got a complete transparency and builds an expectation. And this goes back to my 1990s training of individual traders is, what do you have to do to trade setup? You look at the pattern, you decide where you're going to buy, where's your stop loss, how much risk you're going to take, and what's your target. Every symbol in our database does exactly that, where there is you get a buy, it's going to tell you, here's how long we expect to hold it, here's how much we think it's going to make, and this is what's likely to come out of this thing from a standpoint of holding period, and also what the risk is. And then when you put that in a portfolio, all of these dynamics mixed together with maybe 10, 20, 30 symbols, depending on how many you put in to build your mutual fund, your personal fund. And so this is a important thing to understand. The other spectrum should be here is what percent of the trade during this expected duration has already been yielded. So let's say it's only been 50 days, but 75% of the average returns have been yielded. But maybe this is what I've talked also before. If this is a special situation, it's a stock that you know a lot about, then you can do that. Now, just a side note here is you can build portfolios with ETFs and all other types of instruments. There's 16,500 symbols in WaveTech. So there's unlimited combinations. And the nice thing is you can build these things and change them and update them and back test them, and you can find the ones that you like. And you can also, and I'm going to talk about something else next, is building a concept for what you're going to be doing. And this is a perfect place to start here. And this is exactly what we're talking about here, is that you're going to have this database. Maybe you go and use a screener. On the next meeting, I will get some other things set up beyond what I have set up for this meeting. but actually going and using a fundamental screener to locate ideas. It's not just good enough, and we've had a lot of folks that are looking at things, looking at this product, and just looking at it from the viewpoint of the technicals of what the technical backdrop of the models are telling you. So you can go through and filter through and find all kinds of ideas technically, but I think it's important when you're doing this type of management, whether you're an investment advisor or if you're an individual, it's the same process of finding a set of constituents that you truly understand from a style box or something. You could build just a simple FANG strategy. It's done really well. Put 5 stocks in there, it'll run them, it'll buy and sell your favorite stocks. You could take the FANGs and add another part of the universe. You can make it all up, and I'll talk about that in a minute. But you need to identify the set of symbols that you're going to look at. And typically what we would do is tell you to use one of the stock screeners out there. And you can use, something like Portfolio 123 or something like that. And then you can ultimately bring in a fundamental list, and then you're going to scrutinize it inside of WaveTech from a quantitative and technical viewpoint on how the WaveTech system actually approaches each one of these symbols. So you have fundamentals, got a good solid company, it meets some criteria. The next phase is that it's going to be, the next phase is trying to figure out what the attributes are from a WaveTech viewpoint. So, okay, I like this stock, but does it trade well within the system? And that's why I'm not going through that, but there is a video on understanding each one of the symbols has a self-rating system on it that tells you how well it does. Plus it has full transparency, every trade that's ever been done, metrics, win-loss ratios. We have something called the ER ratio, which is the effectiveness ratio. So that as long as that number is 100 plus, you're usually somewhat safe. 200 or 300 is even a better number. It just tells you that your win versus your loss ratios are much better. So as you go through this creation of this list, this is where I would say this is where the rubber meets the road from the standpoint of you need to be able to generate some ideas and things to scrutinize to bring into the system. Now, a fundamental process, like I'm not going to go in details this week, but I believe next week I will do just that, is we're showing you how to screen for a large universe, narrow it down into 20 to 50 stocks, and then you're going to go through the ratings and you're going to look at the ERs, you're going to look at that holding period, and you're going to start to dig into it from a WaveTech viewpoint. And you can do that simply by dropping these things into a watch list into the system, and then you can review them one at a time from that standpoint. And then if that's one of the best ways to do it. And then once you've scrutinized them at that level, then you ultimately get your active list or your model portfolio. So it's just like it looks like it's a funnel. You start off with a lot and you're funneling it down to some list. And typically what we've told folks, probably if you have ability to use fractional shares, and this number I'm going to put out there doesn't matter, but what we've been telling you, probably need about 30 to 50,000 to do a really effective portfolio with 20 to 30 stocks. That's going to be minimum, and you have to be careful you don't have a lot of these stocks that are $1,000 a share. That's going to make it very difficult to put 3%. It's just going to be difficult to split that stock down into an increment, and so the fractional shares is absolutely a must if you're going to run with a smaller amount of money. Otherwise, 100,000, 250,000. What we want to ultimately do is show people how to run their own 401ks, how to do some things that are going to do two things. One, I went through this big rant on alpha today, and you want to build alpha. You need alpha. You need to show and demonstrate that you're adding value to something other than just buying and holding an index. And you add value two ways. One, by literally getting the equity to grow faster than the index, but you also can, there's two ways to win. The other way is to protect the assets when they're going down. Otherwise, being willing to get out, go to cash, and to protect the assets. And then when the markets are starting to trend again, you redeploy them. And through that stair-stepping process, which I'll show you, I went through a lot of details today, but what you're going to be able to see is exactly what's going on there from that standpoint. So this is important, I think, to understand this basic concept. So we're going to go over, and in fact, I realize I'm in the wrong account here. Okay, I'm just going to put, I've got to bring something up on the other screen. It'll take me just a minute, so bear the silence for just a minute. All right, I'm back. Just bringing this up right now. Hang on, folks. It's coming up. This is a giant spreadsheet, so it's just taking forever to come up. So what we're going to do here is, and everybody's hearing me again, fine, right?
We can hear you on Zoom, Bob.
Okay, good. Thank you.
I'm checking YouTube, so I'm going to make sure they can hear too.
Yeah, I see that. Thanks. Yeah, anyway, so, okay, the spreadsheet is up. So this is a couple things. I'll have the spreadsheet up for a minute. And I don't know, we've mentioned this a couple presentations ago, that reviving this sheet, there's actually some other things I want to add to it. But the, yeah, somebody's asking what's the difference between Portfolio Expert and WaveTech. About 8 years. It's newer technology, and it also has capabilities of doing a lot of things that WaveTech can't. But WaveTech can carry some pretty good weight. And Jay could tell you he's one of our master portfolio builders, and he's done a lot with both. So it definitely can do it. Okay, cool. Yeah, so here's the goal here, and I'm literally going to grab some random stocks off of this list. And this is an old list. This is 2019, 11/2/19. Okay, so 8-9 months old list, and these were screened on this sheet. And one of the things that we did over on the far side here, I know these things are like super small to see. Yeah, maybe I'll make it a little bigger. You'll be able to see a little bit here. So there's fundamental ratio, the price to sales, current earnings, all types of metrics up at the top here. And these are all screened, and depending on the type of screen that we're doing, it might be a growth screen, it could be a value screen, it could be down to small cap or a blended strategy, all that kind of stuff. We all know how I think every story on Wall Street right now is how the large cap techs are outperforming everything more than anything ever before. So I still think that's a positive, even though the last several days that whole leadership idea that I've been talking about on the channel has been being challenged. But just the way the markets have been trading, that's for sure. But the bottom line is all of these different ratios are things that are being screened, and what they, as I go across this top level here, this encompasses what I was talking about a few minutes ago. This average duration holding, it tells us this is the holding period. So this particular stock was 64.72. This is old metrics, but these are some of the things that you need to know about these stocks. So at least when the screen is updated initially, you have these. Like I said, I'm not sure, we're kicking around redoing this again, but it breaks it down to different symbols, what their sectors are. And let me try to, I wish I can't figure out how to get on screen with, I can't get on screen here, but anyway, 1 second here. Yeah, bear with me 1 second. I'm just trying to. So you YouTube folks will be able to see me. I'm tired of talking to a blank screen. I was hoping to get this on the Zoom meeting, but I couldn't get it up. But one of the things that's important in what I'm talking about here is that you want to start to build a constituent list. So there's several things that you can do from the standpoint of building a constituent list. And one of the things that would be absolutely the best thing for you, no matter whether you're an advisory firm using the software and this approach, or whether you're individual, is to actually write out what you're trying to do. So let's say, for instance, you have certain types of stocks you're really attracted to. I don't care what they are. There is no right or wrong way. But let's just say that you love value stocks and you're looking for value stocks, and then you also you don't want to pigeonhole yourself just to a small cap value. But let's say you do a multi-cap value, so you do a small, mid, and large. So I'm not going to be doing that today, but I will do this in a future presentation. Is what I want to do is I want to be able to bring in the process of selecting stocks based on a strategy. So in the case, we would screen for value, and then we would look at the capitalization, and maybe we're going to put 24 stocks in our personal mutual fund, and we would grab, just literally 8 of the small, 8 of the mid, 8 of the large, and we put them all in a constituent list. Of course, this is after we've already done what step? We've taken them, put them in a watch list. We've reviewed them for timeliness. We've reviewed them for the effectiveness ratio. How well are they actually doing as far as the, as the returns are? How far are they within the returns? We've done all the review that I talked about earlier. Now we're okay. We've got our list, and we've honed it down into that funnel I was talking about, where we're finally got that small set of lists. We got 24 stocks, and we're going to do this multi-cap value strategy. And that's one consideration, but it could be anything. It could be the FANGs plus my favorite stocks. It could be whatever you want. And the good news is, and I'm going to show you here in a minute, is that you're going to be able to actually take that and make it and morph it. So let's say today in the case of we built this value, maybe time goes down the road, we're 6 months, we're a year down the road. And now what we want to do is we're going to shift. We want to maybe bring in more of a theme, have a set of stocks, and maybe 8 of the stocks get replaced with a whole nother theme. Maybe they're FANGs plus a couple other, whatever they are, or they could be, I don't know, airline stocks are in play, or financial stocks, all those kind of things. Those are things that you can change, and you can change your constituent list dynamically as you go forward while keeping the track record of everything you did in the past. And so you want to actually, if you brought up a mutual fund and you are the mutual fund manager, you're actually going to be doing exactly what I'm telling you, where you're going to have a list of stocks. Here's my current portfolio, and you're the manager, and you're going to decide what type of constituent list that you're going to have. And what will happen is, we used to be a multi-cap value fund. Now we're going to go to, mid-cap, high growth, whatever it is. You can literally switch the constituent list, and in the middle of the same portfolio, you don't have to build another one. You can change all the constituent lists. So I'm going to grab out of this list here randomly. I'm just going to pull down. Looks like we're going to go alphabetical. And I'm going to copy these symbols. And then I'm going to go over to WaveTech. And I go to the virtual portfolio manager. So we're going to build a portfolio. We're going to create it. We're just going to call this we'll call it multi-cap value. Just keep the theme. That's not necessarily what these stocks are, but this would be the beginning process. So once we get that there, we put it in there, and those of you that have seen the wizard or used it already, we're just going to walk through and answer the questions. It's going to automatically set back. You'll see on the right-hand side here, it's going to automatically set the inception date back 5 years. So we're going to do a 5-year back test. If you want, you can put any date back to I guess the symbol that has the least amount of data, if that makes sense. So let's say you had a bunch of old symbols go back to this database actually goes back to 1980, January 2nd, if the symbol existed. But for the most part, let's just say you want to go back 10 years, or you want to go back pre-08, something like that, and you want to build a strategy just to see how that is going to play out. And so the goal then would be, you can set this to, I don't know, let's just do it. Let's go 2010. And now we're going back 10 years. We hit next, and you'll see over on the right-hand side, it fills out the wizard as we go through. We're going to leave it at 100,000. Are we going to do that? No, let's put it at 200,000. And I'm just going to do some settings. I'm not going to explain what I'm doing. If you watch that video, I explain all these techniques on there, and there will be some more videos to come out. One of the things on these pages, you'll notice there's some copy here, and a lot of what we've done in the past has been with investment advisors. So some of these wording is important to them from a suitability. There used to be a suitability standard. Now there's some new standards out there with the best interest and all those type of things. By the way, if you are an advisory firm watching this, the best interest thing goes away when you start doing these individual stocks. You've got some other criteria you need to meet, still from a fiduciary, but also from a suitability standpoint. But you can build these things, and there's no way that the SEC and FINRA can come back and claim you didn't use the right class of funds and the right ETFs. There's all kinds of junk going on out there in the world right now from the advisory world. But an individual, what we're going to suggest is that you're going to use this high activity, low liquidity. And what this does is it targets 100% of the use of the money. And we're just going to be aggressive. We're going to build this list, this supposed multi-cap basis. So I just want to keep backing up just a little bit so I connect all the dots. So you would you would decide what type of strategy you want. They could be stocks that you've watched for a long time and you just know really well. Put them in the system, see how they test. If they don't test well, maybe you like that specific industry group or that sector, whatever it is that you like about that. So what you can do instead is you find another stock in that sector that maybe trades better than the one that you chose. Maybe your favorite stock doesn't work in there. And I've over the years have had people saying, gee, it doesn't trade that stock very well. And well, there's 16,000 of them. Pick another one. There's plenty of them to find. And it's not about your favorite stocks as much as it is about fulfilling the concept, the constituent list, and the theory of why you built it. So a lot of times, if you're building a style box, what we're simulating in theory right now is that we're building this multi-cap value strategy that's going to have large, mid, and small constituents in the list. And so this next one, this function is for advisors only. This is where a couple of things that we get to choose. And I talked about in the opening comments today is what I wanted to be able to do was to actually have the ability for you to build both a short-term and a intermediate term basis. We're just going to go with intermediate term right now. We'll leave it as it is. Maybe we'll have time, but I want to get through all of this process right now because this is important when you're building when you're taking a quantitative process like this. And this process is going to look at when to buy and sell, how much to buy and sell, risk balancing. It's going to throw you to cash if things start to get risky on your set of universe. When in my old floor trading days, I remember this one buddy of mine used to always look up at the screens and whatever the market's doing is going, it was getting hit hard or whatever was happening. And he goes, he kind of looks at his little deck of cards, his holdings, and he goes, my world's fine. I'm glad I'm not in that world. And so otherwise that's the same way you'll see it as well, because you'll build your own constituent list. You'll have your own universe that you are monitoring and trading. And that's how we all operate. You know, now if you're going to trade indexes, I love trading indexes, that's fine. But when you get into this phase, what you're doing is you're actually looking at, you're going from the macro to the micro, and you're going to start building these subsets of stocks that are going to facilitate ideas and concepts the best that you can get. And they're going to be in construction, and the whole construction of portfolio is going to be based upon the metrics that are coming out of the system. And if you do it this way, what's going to happen is the second guessing of everything comes away. So you validate it. These models that you're looking at have been running real money since 1998. That's 22 years. This is real money. There's still literally billions of dollars being run by our processes out there. And so what's happening is once you get the confidence in the models, it's hard. It is a black box, right? So you don't get to see all the elements, but we do have some transparency. I always call it, it's like the little translucent cube. You can see there's someone behind it, but you can't see the detail. So we have the PPMs and we have some other elements that are out there. But what we supply throughout the whole process, and even when we build this portfolio here in a minute, we're going to build a back test. You're going to have reports. Everything's going to be built instantly, right on the fly as you build it. And this product you're looking at is not the prettiest thing in the world. It is an old product, but it does work and runs very strong. And this was our first effort to get something out to the public, to give them, to give you folks the power which to do these things that we've been doing for institutions for 20 years, over 20 years. And so what we're doing here is I took that list of stocks, and it was alphabetical, and I just dumped them in this top box, which is, without going through the details, I do go through the details on the video, but when you put them in here, you're just optimizing. There's two models that we have. It's called 1.2 and 3.2, and there used to be 8 models, and those were the models that we chose to go forward with. So back in the development days, there were quite a few models, and those are the models that made the cut. And in fact, we did a study back, I think in '99, when we were first bringing this out into any kind of scale to advisory firms at the time, as we did a white paper. Actually, my old partner Dave did a white paper and looking at what was the best model, and basically found that at the time that 3.2 was the best model. It still optimizes that way in the system as well, as it still has a dominance in the, as far as the weekly models, actually, and as far as the daily models go, but on the weekly models, it's pretty balanced right now. And we're looking, what, 20 some years later, a lot of trades, a lot of stats that have rotated in. And every time there's a new trade on our model, the stats and all the metrics are updating real time based on what the performance of the models are doing. So there's a continuing growth of the ER ratios, the win-loss ratios, all the metrics that you see when you go into the research area, which we're not even going to touch on today. So I put a list of stocks in here. And when I hit next, this is the place where you see all of the constituents that you got into that you put in, that I just dropped in. So like I said, they're alphabetical. And the thing that we want to see here is that there's all green buttons here. And that means there's live data. And this is the end of day process. As of the moment, nothing has actually occurred yet from the standpoint of today's activity. What happens in about an hour and a half from now, we go to our data vendor, we pull down the data, we load the data in, we run the models, we update all these strategies in the system on both models, the WaveTech and the Portfolio Expert. And then once we get all that in, then it updates everything, and it will reflect, it'll actually reflect the it'll reflect all the activity that happened today. As far as this system goes right now, today hasn't happened until we get that data. So as far, you'll see 8/17 last date, that was yesterday's date. When this models run tonight, if you brought up the same screen, it would say 8/18. So we go next. These are all live symbols. And theoretically, if you remember what we're doing is we were building this theoretical multivariant all cap value strategy. And like I said, it could be value growth mixed. It could be all growth. It could be high cap, large cap growth. It could be anything you want. And that's the important part. And when I talk about building a personal mutual fund, what I would like to see you do is actually write down a statement of what you want this fund to be. Just like if you went to, I don't care, whatever fund group you want, you go to Fidelity, look at their funds, there's a statement of what this thing does. Of course, they all say the same, looking for appreciation of growth and some other statement that every mutual fund says. But what they do say is they talk about specific style boxes, what type of symbols or stocks. So that's why you get value mutual funds and growth and blended, just like what I'm talking about. So you get to build your own personal mutual funds. I personally think that the mutual fund industry will be in trouble at some stage here in the next several years, because when I show you folks the dynamic multivariant direct indexing, when you start to build some really dynamic procedures, and we get this thing automated so you can slip these orders right to your broker dealer in a fractional share environment, you're going to just build your own funds. You're not going to pay some fund manager embedded. There's anywhere from 50 basis points, and that would be cheap, to 1.5% to 2% that the fund manager is taking. And if you did go to an investment advisor that's using those type of funds, you're really going to have fees on top of fees. You're going to eliminate all that, because now you have no transaction fees. You can do fractional shares, and this is going to bring the efficiencies in big time. I may bring this up today, but I demonstrated a couple of weeks ago, if you have a 60-40 strategy, which is probably the most common strategy that is out in the investment community, and I can show you what happens over time when you put fees on top of this stuff. So everything that I'm presenting to you here is giving you the ability, which to be able to build and manage your own money without internal fees. No mutual fund guy is getting your fees. The ETF company is not taking 25 bips. They're not taking anything. And by the way, the no transaction fees, you're paying through all the stuff I'm talking about. And what we want to do is build these funds. They're going to be dynamic. They're going to change. They're going to do all kinds of stuff. They're going to protect everything I've talked about so far today. And what the end of this event's going to be is that we're going to have, you're going to have your own personal mutual fund with zero, I'm talking zero internal cost, no cost of carry on this thing at all. And maybe since I went into this thing so deeply, once we build this and I show you a couple more things, I'll show you the effects of the fees and what they do over time. A 1% fee accumulating over 20 years is brutal. It costs almost, I think it's around 38 or 42%. It's not 20%. It costs a lot. And I can show you on a passive system. I can show you in a passive approach. I'll do that before we leave out. I'll have to load that program up, but I will do that for you when we end what we're doing now. So I know I've interrupted everything, but all we're doing, I'm giving you a lot of detail on each one of these steps, thought process, how to think, what's going on here when you're building these things. This is serious stuff, folks. This is your money. This is building portfolios to manage your risk, to be able to build that thing I went on a rant about an hour ago on alpha. Alpha is important. Developing some sort of value in what you're doing. So you're already going to be a winner by eliminating the fees that I talked about. That's already a win. All you have to come up then is a good back test, a good strategy which to update these things. This stuff is not that hard. It sounds complicated. And what I'm going to do is ultimately a video is like step 1, you do this. Step 2, this. I'm going to do that video. I was jotting some things down before I started today. But this is all the in between the lines. This is everything that is important to understand from that standpoint of what's going on. These are all fees that we're stuck on, and what I just hit just now, I'm going to back up a step. It happened so fast. So these are management fees. These are all these steps, and it says they're just for advisors. So these are all zeros. If you're an individual, if you're an advisor, you would put some things in here. You would put your annual fees in here. And that way, everything in your back test and everything's going to be net of fees. But from an individual, there are none. When I click next here, it's going to do a calculation. And I just click next, and now you'll see the screen changed. And what's happened is it's 0.0669. So we're going out 4 digits on the allocation factor. And I talk a lot about the fractional shares. Well, we already deliver orders. When you get orders, we deliver them out 6 decimals. So there's 6 places. So you can really fine tune a portfolio from the standpoint of fractional shares. And like I said, the key element is ultimately getting this so it's seamless in that you have a automated system that can hook up with your broker dealer and just pass through the credentials and find out how to pass through the information directly to them. There will obviously be a list, and we'll figure that out. There's some progress being made in the background, but the bottom line is this is the allocation factor, or how much money. You'll see it's called initial allocation factor. So what this does is the system goes and looks at how many stocks we have. 27 stocks, and I just randomly grabbed here. We have 27 symbols, and what it's going to do is what it does is it goes and looks at every symbol, see how many times it buys and sells, what the average holdings are per day, and it figures out how to use the capital. Now, we told it up above to use high activity, low liquidity, and what that means is we're targeting using 100% of the cash as much as we can. Now, if all these symbols are going south, we're going to have cash. We're not going to own them just because we put that there. The models have, the stocks have to be trending, and they have to be, they have to be in a trend, and they have to be within the context of the models to be able to have an open position. So we're going to go next here, and it says we're finished. And we hit next, and it's going to run this portfolio. We called it multi-cap value. And actually, all of these portfolios that are on this account are portfolios. There's a little button up at the top when you run it, says you have to hit OK. Once you hit OK, it's running. You'll see multi-cap value is in the allocation queue. And if you don't refresh the page, it will stay in the allocation queue. So I can hit portfolio access, or I can hit portfolio manager, which will refresh this list. So it's still in the allocation queue. It takes about anywhere from up to 1 minute for it to run. Once it hits the queue, it will show. Yeah, so it's already run. So this little random list was not, we didn't research anything. So we're minus 10%. So not a great list of stocks. They're old lists, but I just wanted to demonstrate how this thing is done. So this is the returns off of those stocks. What it did okay. It was actually a screen for 2019, so it did pretty well. If we'd have ran that same screen that I grabbed from and updated it over the last year, we'd have a whole different set of symbols. So this thing got clobbered, and this is an intermediate model. But right now it does have 91% of the money working, and it shows that current, it's up 1.9%. Last week it was up 2%. So it's making some comeback here. But I just wanted to show you, this is just building the strategy. That's important to understand. that's important to understand from the standpoint of the, building a constituent list and doing this. So let's just say this was a list and we tested it and we didn't like it. There's a couple things we can do. We can say, who are the bad guys? Who took the money away? Who are the losers here? So we can come over here and go to symbol returns, and every trade we can see which models. You can see right now CXW, BKE. There's some symbols that never made any money. So here's a few right here. Then there's some that didn't make very much. Here's another negative. So we could just simply cleanse that list. But we would have already known this if we went through the procedure that I talked to you about earlier in this presentation, is you would have been already reviewed these symbols, and CXW wouldn't have made the cut. Most likely none of these stocks that are negative. There's quite a few stocks that wouldn't have made the cut if you'd done the review process. So it's screen. This was a raw screen. So the raw screen takes you from there down to the raw screen when you're setting up a portfolio will take you from just what we got here. This was just a raw screen. But once we review these symbols, we're going to have the selection process is going to make sure that they meet the criteria fundamentally that we went in. Let me bring that spreadsheet back up for a minute. So we bring up the spreadsheet. We just grabbed a random set of stocks, accelerating growth, and it was also from a screen that was done last on 11/2. So next week we do this. We'll get some accurate screens and we'll go through just the process of things that I'm showing you here right now. But once you have your set of constituents, you've decided what kind of style box that you want to do, you've reviewed them and you've honed them down. If we'd have went through each one of these symbols, we could have easily, matter of fact, I'm going to copy them again, and we'll go back to WaveTech tool real quick, and we'll go to watch list. I'm just going to dump that list right in here. I'm going to optimize weekly, and let's see here. I got to give it a name, so we're going to call it multi cap value. Not actually what they are, but if you've been watching the presentation. So now we can see what's currently long, what's not. We can literally have a list. So it's very simple. If I want to I want to go see the ER ratio. I want to see the performance on this stock. I'm already, it's got an excellent performance. It got out the third week after the collapse and it hasn't got back in. So this big trade is what caused that loss. And we could have converted it over. We could put a daily graph on it, and maybe we could have done a combination where you can see the daily, if you can see my cursor here, that's where this model exited. But this may not be the stock that makes sense to fit in, and you have to just go through these things and set it off. So the whole portfolio build process is review. I see Jay commenting on the line. He has some other procedures that he does when he's reviewing and building and testing. That's something that I plan on bringing him in on maybe the next meeting and having him discuss some things. We've actually been working on putting videos together that he's going through a procedure that he does. And especially if he's consulting a client or something like that, where, hey, we want you to help us build this thing, then we can help we can help facilitate that, so it's easy to go on from there, and that's important. But all of these things should be researched ahead of time. So let's just do one last step, and this is also in this is also in that video on the portfolio expert. If I go up here, this video right here, building WaveTech portfolios 101, it's 35 minutes long. It steps you through all of these elements that I'm talking about right now, but
I filled in a lot of information on this presentation today that is going on. I've literally been going for an hour and a half, and I could go for another 3 hours. There's so much, and I don't want to make this sound overcomplicated, but when you start to look at the building these constituent lists, it becomes easy. It's just it's a 1, 2, 3 process. You look for them fundamentally, or you come up with a list of symbols that you already follow and like. And if you don't follow or like anything, then go to a screener. There's a bunch of free screeners out there that you can get your hands on. And I think there's even stuff that I think was at TechSmith by the folks that did CanSlim. You can do CanSlim strategies. You can do all types of strategies that that you can do from the standpoint of building building things that are going to meet the criteria that you put out. If you recall, you write down what you want the portfolio to actually be. What is the process, or what is the underlying theme? And we talked a lot about having even thematic type approaches or motifs where they are very highly concentrated. The way that you make money in the markets is through concentration, not through diversification. And if there's anything wrong that the advisory community does, it's all about diversification. The more you diversify, the less likely that you're going to be able to mitigate any possibility of creating that thing that I talked about earlier, and creating any sort of alpha, because it's just not going to be able to. Diversification is a fastest way to moderate gains that I know. And I'm glad we got Roy off of there. Thank you, Jay. I suspect maybe you did that, or Mason.
That was me. I was watching him to see if he was trying to get a message out, and nothing ever came out, so he's in a timeout. He's been bad.
Yes.
Can I say something real quick while I got you going here?
Sure.
I wanted to say this, but I didn't want to interrupt your train of thought. When you were making that portfolio and you're using that list from November of last year, I wanted to say that was actually the list that I used to get my small cap companies.
Oh, really?
When I built the the what do you call it, the small block portfolios. That's where that came from, was that list.
Oh, okay.
So I didn't know if you want to show those, but it goes in exactly what you've been talking about. And,
yeah.
And I, that list still produced some pretty good portfolios, but I did do that screening process. I did exactly that.
Right.
What percentage? Were there some that were really bad losers? I didn't get rid of all the losers, but some that were just really, really bad. But I used that list,
okay.
and you kind of checked out the small block portfolios. That's exactly where they came from.
Yeah. Got it. Hang on one second.
I'm signing off right now.
Yeah, you probably had double voice, but I had to turn on that channel so you could hear it. And in fact, I bet I know how to get rid of. I just figured out something. Well, no, I can't do that, because then the folks on there's a combination, because what we're doing, folks, is a Zoom meeting with paid users that are on there, and I'm going to open up the questions here in a minute, because this is pretty. I went so far down this rabbit trail that there's almost no way back. But I wanted to show. I think that's where I'm going to actually just open up, because I've been going for an hour and a half. You folks have been patient watching and doing all that stuff. So why don't we go ahead, and I'm going to. I think I know how to keep it. I think everybody, when I do this, I'll have to multitask on how to do this, but I think I know how to do it. So we'll go back to full screen here on YouTube. And yeah, so any questions? And hopefully there are some.
Fine, Jay.
No, I can't hear him either.
Yeah. Okay. Yeah. So, yeah, there's a conflict. I'm going to get double voices here when I want people that are on. Yeah, I haven't figured out exactly how to keep, I guess, my voice going on this thing and everybody be able to hear me and not double hear me on YouTube. That's what's happening right now. Yeah, there's a conflict. I'm going to get double voices here when
And
I
the
want
only,
people
only way
that are on.
I might be able to do something here.
Yeah, I haven't figured
Yeah,
out.
there's not going to be any
exactly how
way
to
because
keep,
what's happening is my voice is coming
I guess,
in on
my
the Zoom
voice
meeting
going
and
on this
it's
thing
coming live
and
on.
everybody be able to hear me and
It's
not
coming
double
live
hear
on
me
YouTube as well.
That's
So there's
what's
a
happening
conflict.
right
I
now.
did this before
There's a
successfully, but
conflict. I'm gonna
it's
get
not working
double
right now. I've got to look at
voices here.
configuration. I'm
And the
using
only-
a new
only
piece
way
of
I-
software here.
I might be able
But
to do something.
Wayne, try that
here.
again.
I haven't figured
Yeah,
out
there's not going to be any
exactly how
way
to
because
keep
what's happening is my voice is
Yeah, I
coming
hear you
in
good.
on the Zoom meeting and
on this
it's
thing
coming live
and
on.
everybody be able to hear me and
It's
not
coming
double
live
hear
on
me
YouTube as well.
That's
So there's
what's
a
happening
conflict.
right
I
now.
did this before successfully, but it's not working right now. I've got to look at configuration. I'm using a new piece of software here.
I might be able
But
to do something.
Wayne, try that again.
Yeah,
There's not going to be any way because what's happening is my voice is
Yeah, I hear
coming
you
in
good.
on the Zoom meeting and it's coming live on.
everybody be able to hear me and
It's
not
coming
double
live
hear
on
me
YouTube as well. So there's a
That's what's
conflict. I
happening
did
right
this
now.
before successfully, but it's not working right now. I've got to look at configuration. I'm using a new piece of software here.
I might be able
But
to do something.
Wayne, try that again.
Yeah,
There's not going to be any way because what's happening is my voice is
Yeah, I hear
coming
you
in
good.
on the Zoom meeting and it's coming live on. It's coming live on YouTube as well. So there's a conflict. I did this before successfully, but it's not working right now. I've got to look at configuration. I'm using a new piece of software here. But Wayne, try that again.
Yeah, I hear you good.
able to hear us again.
Yeah, because I had to turn it off. Damn it.
Uh-oh.
This is so frustrating because now I got double
Can you hear
voices
me?
going. So I can't
You
win.
guys hear me?
Yeah, we can hear you.
I have a question. You talked about like a scenario where there
Able to hear us again.
Yeah, because I had to turn it off. Damn it.
Uh-oh.
there.
This is
Can
so
you readdress that?
frustrating. Yeah,
Now
I
I got
can.
double voices
I
going.
think I figured out I got to mute one side and the other. So yeah, what the plan is these numbers here, I'm showing them on the screen. This is the market grid for back on 8.6, right? So there's going to be a list of symbols. There'll be a prettier presentation. I'm not sure it's going to work here. It might actually end up being a email delivery, but I think it's going to work in this area here. This message log is a place where we're going to be. You'll see here where what was this? On the 5th, we completed a bug fix on raw output models, and we're going to communicate to you here. But there also you'll be able to scroll through this. I think this thing keeps all the messages that are delivered up to 45 days, and then it starts parsing out the old ones. So what will happen is the market grid numbers will be here, and we're working on formatting and a bunch of stuff. This is just kind of raw text, but that's more or less the plan there. Communicate to you here, but there also you'll be able to scroll through this. I think this thing keeps all the messages that are delivered up to 45 days, and then it starts parsing out the old ones. So what will happen is the market grid numbers will be here, and we're working on formatting and a bunch of stuff. This is just kind of raw text, but that's more or less the plan there. Communicate to you here, but there also you'll be able to scroll through this. I think this thing keeps all the messages that are delivered up to 45 days, and then it starts parsing out the old ones. So what will happen is the market grid numbers will be here, and we're working on formatting and a bunch of stuff. This is just kind of raw text, but that's more or less the plan there. Communicate to you here, but there also you'll be able to scroll through this. I think this thing keeps all the messages that are delivered up to 45 days, and then it starts parsing out the old ones. So what will happen is the market grid numbers will be here, and we're working on formatting and a bunch of stuff.
He asked in the chat.
But that's more or less the plan there. Yeah, so dividends aren't calculated in. So those are calculated at your custodian. So we are just modeling the symbols and the buys and sells, and then when dividends come in, they'll reflect in your balances on your account. So all of these returns, that's actually a good question. All of these returns are actually all the returns are actually the minus dividends. So they're probably all understated if there's dividends on some of these stocks. And they'll reflect in your balances on your account. So all of these returns, that's actually totally ignored. They're non-existent. So the only thing that is not ignored is if a symbol goes X, it goes X dividend and it pays out, then that symbol is going to be down that day. So the dividends are reflected in the pricing, but where you'll get those dividends is if you're holding that stock at that time, it will reflect that in your custodial account. The only thing that is not ignored is if you're welcome. Symbol goes X, it goes X dividend and it pays out, then that symbol is going to be down that day. So the dividends are reflected in the pricing, but where you'll get those dividends is if you're holding that stock at that time. Yeah. Okay, so we can go ahead. In your custodial account. The only thing that is not ignored is if you're welcome. Symbol goes X, it goes X dividend and it pays out, then that symbol is going to be down that day. So yeah, you folks should be able to see me, so I have to remember to mute in and out, or otherwise you're getting two of me. Yeah. Okay. So and in fact, you might be able. You're welcome. Yes. And the way that you're going to be able to do that is only at the moment, as far as we know. I'm kind of freaked out. I'm trying to log into Oh, good. Trade station's back up. So I'll show you. I worked on a project this weekend, but that we're going to be able to put in quite a few symbols. We can follow up to about 3,000. But ultimately, what you're going to have to do is actually. I'm kind of freaked out. I'm trying to log into. Oh, good. Trade station's back up. I'm sorry, I got stuff happening on my screen here. What you're going to ultimately have to do probably is to get it on TradeStation. You're not. Are you a TradeStation user by chance? Quite a few symbols. We can.
I'm not at the moment, but I'd be willing to do that if I could get
Yeah.
grid
So. So the project that we finished on Sunday actually is stuff happening on my screen here. Is stage one, and if looks like my TradeStation was down, I couldn't get logged in here for a while, so I'll attempt to. But I have a page I brought up, and it's kind of annoying if I bring it up because it's got all kinds of alerts. But I do have a way to actually watch up to like 3,000 symbols, and this was based. This was what I was talking about from the standpoint of the TradeStation was down. I couldn't get logged in here for a while, so I'll attempt to. But I have a page I brought up, and it's kind of annoying if I bring it up because it's got all kinds of alerts. But I do have a way to actually watch up to like 3,000 symbols, and this was based. This was what I was talking about from the standpoint of the TradeStation was down. I couldn't get logged in here for a while, so I'll attempt to. But I have a page I brought up, and it's kind of annoying if I bring it up because it's got all kinds of alerts. But I do have a way to actually watch up to like 3,000 symbols, and this was based. This was what I was talking about from the standpoint of the TradeStation was down. I couldn't get logged in here for a while, so I'll attempt to. But I have a page I brought up, and it's kind of annoying if I bring it up because it's got all kinds of alerts. But I do have a way to actually watch up to like 3,000 symbols, and this was based. This was what I was talking about from the standpoint of the TradeStation was down. I couldn't get logged in here for a while, so I'll attempt to. But I have a page I brought up, and it's kind of annoying if I bring it up because it's got all kinds of alerts. But I do have a way to actually watch up to like 3,000 symbols, and this was based. This was what I was talking about from the standpoint of the. Again, back to no sound. Now there's sound.
It might not. I just saw that. Yeah, Neil chimed in that he couldn't hear, but everyone else had said they could hear. But that was I don't know, maybe about 10 minutes ago. Yeah, right there. Anil said there's no sound again.
Yeah, I see that. So it should be now, and it's just so frustrating because I have to mute out. Yeah. Anyway.
Hey Bob, it's AJ. Just quickly wanted to interrupt for a second. I know you were having a conversation about platforms and uptime. I know TradeStation's had issues, and so has TOS. But I know Tastyworks has been running strong for a while.
Yeah.
I don't know if that's an option for you guys.
Yeah, you know what's funny is Tom Snozoff was the first customer to use this process I'm showing you. He was my very first customer. And I'm going to have him on again. We're working on a platform, but Charles Cottle I had on, which is also one of the founders, one of the founding fathers of TOS. And probably he brought the idea to Tom. It wasn't Tom's idea. And, so it's interesting that Tasty's up, and the reason why they're probably up is because they don't have the volume that these other guys do. And I think what's happening is just so much volume hitting some of these platforms. What Robinhood was down for 2 days, and
Yeah.
and by the way, Robinhood is doing more transactions than all of the other guys. I saw the other day 4.5 million, what they call revenue transactions per day.
It's crazy.
That is crazy. So so I mean, this is stuff we've never seen before. These are large mega cap companies that are running this stuff, and I can tell you, I'd love to be in a couple board meetings and be in one of the big IT meetings at some of these firms, because it's pretty crazy what's going on here. But it's not very much fun if you've got an order to get in and you can't, especially if you're just trying to get out of the way, right? It's one thing if the market's working for you, you don't care. But if you got to get out, that's a really bad moment not to be able to get in.
Yeah, that was my issue. I'm in
I'm sure.
immediately and try to get out, and it crashes, and I'm like stuck in. It's crazy.
Not a good feeling. I would only share. I could share a very. I could share a story, I guess. Is that I had. Hang on, I don't want to be on this page. Sorry about that. Back in 1979, I got caught in soybeans 3 days in a row, limit down. So there was no 24-hour trading. All there was the day session, and there was some event. It actually happened to do with the Russians were going to buy all this grains, and the deal fell apart, whatever went on. And I was stuck in the market for 3 days, limit down. And, limit down was one contract was 5,000. It was just ripping money like it was never going to end. And it was pretty brutal, to say the least. And so that being stuck for an hour would be a good thing compared to that. Not if that's any consolation at all. Another question? If you build a good portfolio, a good construction if you build a good constructed portfolio, that shouldn't come up. There's going to be times where, I guess, not working means you're losing money, right?
Yeah, sure.
Yeah. So
and you're also on the you're also talking to a guy who had a pretty strong share of WorldCom when things went pretty hard south in 02 and 03.
Yeah, I won't tell you how much I hate those guys. I was glad to see them go down. But that's a personal story. But I guess not. But I think what has to be, as far as what happens with these portfolios, if you look at their equity curves that you're looking at, you're going to see ups and downs. And if symbols are starting not to work, it's ultimately going to get you out. It's just how much of the drawdown. And that's why one of the things that we haven't talked about, which you just brought up a really good subject, which we won't be able to hit on today, but in future, is how to look at a portfolio's performance and determine what you're trying to determine. It's too long of an answer, but I think for the most part, you should be able to, normally we don't get one of these events like we saw this year where the markets just collapse and you're in and the world's coming apart. You can make that decision, obviously, to get out of the market. But even if you rode through that and went through it, you can see that portfolio randomly built. It was 10%, so you just keep following the process, and and typically it'll get you out of it. And it's not, there's no way to cut bait on them, because that means somehow you know how to override when the models are working and they don't. If I figured that out, that would have been really easy. The way that they work is updating these, the things we're talking about today is updating these constituent lists and being able to actually, just rotate these stocks and keep bringing in. It's sort of like a sports team. You're bringing in the fresh players all the time. Like, okay, it's like probably the best analogy would be a hockey game, right? People are just in and out of the game all the time, and you're always trying to keep fresh bodies out there.
That's perfect. Thank you.
Yep. I hope that was helpful. But there is some things to look at, metrics to look at. Bringing in the fresh players all the time. Like, okay, that I'm just making some notes to myself to be able to do some of those things. And you're always trying to keep fresh bodies out there.
That's right. Thank you.
Yep.
That's perfect. Thank you.
Yep. I hope that was helpful. But there is some things to look at, metrics to look at. Yeah, I think I've figured out for the most part, you're going to get some double voices on YouTube, but if I cut, so this should be fine on YouTube now. So let's see if there's any other questions out there that, Jay, you seen anything that you think we should talk about?
Not really. I think we've covered quite a few from what I've seen on the questions and everything.
Okay. For the most part.
Some of it they're asking the differences between WaveTech and Portfolio Expert and stuff. But
I promised something. Should be fine on YouTube. I promised something a few minutes ago, and I'm going to bring up Portfolio Expert. I don't have it loaded, but I will here in a minute. And I want to show the effects of fees. That was something that we talked about a little bit ago. So I will slide it over here in a minute so you can hear that. Should be fine on YouTube. I promised something a few minutes ago, and I'm going to bring up Portfolio Expert. I don't have it loaded, but I will here in a minute. And I want to show the effects. Yeah, so it'll be up in just a second here. Something that we talked about a little bit ago. So I will slide it over here in a minute so you can hear. What I talked about earlier, I promised something a few minutes ago, and I'm going to was looking at a 60-40 strategy, and you'll see here I've got 60-40 split. And actually, what I'm going to show you something here that, and this is why I've talked to a lot of folks about, bear with me one second here. I want to make sure. 60-40 strategy, and you'll see here I've got 60-40 split. And make sure that the YouTube folks aren't hearing double again. So what I'm showing you here right now is that there's management fees coming out of the 60-40 strategy. And it's 1% annual management fees, and then it's actually showing you at the beginning of the year. Excuse my sirens here, but it's showing you a rebalance. So in this particular strategy, we only rebalance once a year. If you rebalance more, the returns get way worse. But so we do once a year rebalancing. You'll see on 1-2 each year there's a transaction, and what it's doing is resetting the balances. So it's resetting the 60-40. Between January and December 31st, what we're going to allow happen is we're going to allow styles drift. And my argument, just to talk about passive strategies, is you want to let them drift outside of their box, but outside of that 60-40 box. So let's say, for example, the way they will drift is if stocks are outperforming bonds, then the 60 will grow to a bigger percent, and you want that because that's what's performing. The 40% will decline in its value. And there was a pretty substantial rebalance that happened just a few months, last month. I think things have gotten way out of whack because the way that the rebound in equities had occurred. But this is just showing you the fees. So now what I want to show you here is what happens what happens, the chart that I have on the right here is a 60-40. This is 60-40. Let me do it. This is 60. Bring this up again. This is a 60-40 strategy, and I'm gonna go back to just a 1 year look back. So this is what it looks like on a 1 year look back. 60-40. It's got Vanguard bonds versus the S&P 500. SPX is the other model. Probably could have put SPY in there, made it an ETF model. But it's going to show you just, we're right back. Here was the February highs here, and then here we are here. So this is what it looks like on a 1 year basis. Matter of fact, let's go year to date. Let's make it even tighter. So now what I'm going to do is I can put multiple portfolios on at the same time. Now I'm going to add in the second one over on the left. I'm clicking on the 60-40 benchmark only. I'm taking a 1% fee out on a quarterly, on an annual basis, taking quarterly payments. Okay, and this is what typical advisors do. So you can see here, it looks pretty tight, no problem. This is year to date. It's pretty much matching. But what happens as we start to go out over the years, this still looks okay. 1 year. Now we go to 2 years. Now you start to see the green line starting to drop below. The fees are starting to accumulate a little bit. Now, right now, it's pretty much what you'd expect. It's about a 2%, but it starts to compound. Now we go to 3 years. Now you see the gap. Let me go to full screen here so you can see this. So the gap now goes from 26% return to almost 28.5%, so a little bit more. Now we're going out 5 years, and you start to see this, the green line starting to be more under the 60-40 line. Now all of a sudden we're around 37% versus 40%, and it just keeps getting worse. Now we go to 10 years. Look how this gap starts to build. Now all of a sudden you have a 95% return versus a pure no fee strategy at 110. Let me go full screen here so you can see it. And now if we go out to all, this goes back to 2000. Now look at the gap. Look how big the gap builds over time. And so if you had a 20-year advisory account taking 1% out, you're passive. You never bought and sold anything. You don't have any taxes. You don't have anything to pay. You just passively did it. This is actually at least rebalancing. So you might have some minor taxes, but I could even set this up so it didn't rebalance at all, and it would actually be worse. But let's do the. But there are rebalancing trades that most firms do. But now you're looking at around 78% return versus 115% return over that 20-year period. So now all of a sudden you're looking at around 32, 36% of what's going on here as far as what the returns. And this is passive, other than an annual rebalance. That's all that's going on. That's all that's going on there. And so that is that's just kind of an illustration. And this is Portfolio Expert. We don't want to teach you too much. We've got to get this on a different platform so that you can join in on taking a look at this thing. We're trying to figure out how to get that rolled out. But it's really for WaveTech itself is going to be able to do a lot of work building these strategies that we've talked about all day and all of that stuff. So let's do one last question. We're looking at taking a look at this thing. We're trying to figure out how to get that rolled out. But
I have a question.
It's really for I have an answer.
WaveTech
itself
is going to
be able to do.
About a month ago, I was joking and texting back and forth or communicating back and forth with Jay. And I said, I need an assistant to help me create portfolio ideas. And then he messaged back, that's what I'm here for. So, not to put Jay on the spot, is he going to give us like portfolio ideas and kind of create like a 25 stock portfolio that we can kind of bounce off of?
Yeah. So
Again, not to put him on the spot.
yeah, well, he's always on the spot.
I am on the spot big time.
Yeah.
I'm sweating bullets over here.
yeah, but you know, he's got to deal with me for his whole life, the poor guy. But you know, yeah, so one of the things that we didn't do, and Jay, we'll just do this live, is we need to clean up the Premiere area and get that stuff, you know, so that this platform has a lot of the other motifs and some of that stuff available on it, and bring that out to folks. So the answer is yes, there is some of that. The other answer is we're working on a way to actually work with individuals on you know, how to build maybe custom stuff if that's important. So we haven't figured out all these details yet as far as working with a lot of people and trying to get a scale that will work. And hopefully at some phase, you know, we could even have some of you guys out there in the field get good enough. One of the things that somebody brought up, I think it was in last week's meeting at some point in time, or an email I got. I don't know, everything blends together, right, Jay?
Oh yeah, everything's blending together. I don't know what year, what month, I don't know what planet I'm on anymore.
Yeah. With, you know, as far as who's asking a question, where it came from, but somebody brought up something I thought was really brilliant, and this addresses your question as well, is the ability to share portfolio. So inside of the system, there's if I go to the portfolio manager here, there is, oops, I got kicked out. I love it.
I don't know what planet I'm on anymore.
Oh, that's because I hit another browser. That's fine. So there is a ability here. When you go to a portfolio manager, you'll see way over here a sharing SH. So if I know, this is the name of the portfolio. If I know your username, I can actually share a portfolio with you. And what it gives you ability, it gives you the ability to see it, but you can't modify it. So you could use it. So if one of the things, maybe there's a way, you know, I don't know if we want to give out usernames. We're not going to give them out, but if there's a way for some interchange to be made, because if you have somebody's username, then you can give them access to your portfolio. That's what we do have right now. But on the under subscriptions, there is when you go to portfolio manager and you got subscriptions here, we do have some pre-built stuff, and this stuff just needs to be cleaned up big time. There's some of this stuff like the COVID consider quantum 2, and all you do is click on this and you go down here and you hit apply, and then on my, you'll see under my Premier portfolios, it shows up right here, and I can click on it, I can review it, I can do everything I just told you. I can absolutely be able to see both of the you can see all the metrics, and you can see the open positions, you can do all that. So there is a possibility there for custom stuff, and we're trying to figure out how to do that, if that's what part of your question was, or maybe it's just like a list of, here's a bunch of pre-built stuff.
I think we should have some kind of forum where
you can see all the metrics, and
all the members can communicate like on dailies. Like we found a great scenario, even to day trade, swing trade, long term, all that.
I agree.
Challenge somebody to create that, because I'm not good at that.
Yeah, I'm not either, and we're working on that. One place we might be able to do something like that is even on a Facebook. And then we've got several folks, some are on the call today, that could even be, we could be moderators, and we could have approved, we could make other folks moderators on the channel to be able to do that. And Facebook might be the right answer for that. I know there's quite a bit of, you know, Robinhood has a big Facebook channel that a lot of stuff going on, and then I think you can form groups within groups, right? So that might be the easiest thing than trying to build some blog site. To be able to do that, and Facebook might be the right answer for that. What do you think of that idea? Quite a bit of, something like that. Hood has a big Facebook channel.
Yeah, any shared information, I'm all about. I would love that.
Within groups, yeah, right? I agree. I think we've got to figure that out. So probably setting up a Facebook, and the tough part of all these things is moderating and policing that stuff, because they're just, both of us, it's like we had to put some guy in timeout on the timeline here today. Yeah, I agree. I know I do it. Jay does it. Mason does it. We're all doing it. We're constantly deleting all these bots that are hitting the YouTube channel, Bitcoins and, brokers, and here's my phone number and email. It's all that crud. So you just get attacked, and I know Facebook's really famous for all that. So I do it. Jay does it. But something like that would be good. It's just a matter of being able to moderate and have some things, and maybe there's, like I said, we can get some of you folks out in the field to moderate as well, just as far as questions, and then having some kind of reach out to us that we can get involved, or maybe we do a live Facebook event or something. That's, we're simultasking right now on YouTube, and what we maybe could do is also do a Facebook broadcast, and then we could have Facebook groups and do some other things trying to facilitate some of this stuff. Yeah, as the community grows, and it's growing pretty fast, we're trying to figure out how to do that, because I think if we had that interaction, it's getting to be too long of an answer. But yeah, I think it's a good idea.
Well, my vote is to do something that doesn't even involve you, because you need to sleep every once in a while, and that's kind of like my input.
That's pretty funny. Yeah, I do. I get my rest. Sometimes not as much as I want. Sometimes it's not you guys, it's the markets. Yeah, Jay, that's the wrong price. Yeah, I haven't settled on the price. You're right.
Yeah, that's why I was trying to, because they were seeing it on the website, and I was trying to clarify, but I did post on there. We haven't, I don't think we settled on the price yet.
As soon as what we're trying to do, folks, is right now it's not a web app. We're working on putting Expert onto AppStream, which will turn this product into, you'll just have a login, and it won't matter if you're on a Mac or what you're doing. You'll just be able to log in to that AppStream account. It will get created automatically. So we were pretty close a week or so ago, and then I'm really frustrated with Amazon right now, but we'll leave it at that. All right, well, I'm pretty burned out. What time is it? 3:46? Yeah.
It's a late one here.
Yeah. So yeah, no, listen, these things, these are good. People wonder, how we can do this. When we do these things, we get a lot of new signups, so it's okay. I'm glad to do this. It's part of building our community. It's part of supporting our community. It's all of the above. It really is. It's really about this, because the goal has been forever for me, is to be able to bring out a process to the public that they can manage their money, they can mitigate risk without doing the classic diversification idea. And and like I said, I know that there's folks on these calls that are also investment advisors, so it works for everybody. And it's just a matter of what we've seen already is a tremendous amount of activity and support around the retail community has been pretty phenomenal. And I know Jay and I've talked quite a bit about this, and so we're figuring things out pretty quickly, actually, compared to where we were just 2.5 months ago. I think we've updated the servers 3 times. They run pretty fast and pretty efficiently anymore. We haven't had any issues. We actually had one day where we had so many users in the same time we were doing the TOS dance, the Think or Swim dance, where the server just timed out. So I understand how all that happens and the capacity issues that exist on the planet. And all of us expect it. Our expectations are that it will be there when we want it. So anyway, yeah, so I think we're probably done. I really appreciate everybody showing up today. It's pretty amazing, all of this stuff as far as everything goes. You know, I put up on the screen on the YouTube channel. This is where you go to sign up. This is the best place to sign up. On YouTube, let me know if you're hearing me on the screen. That would be interesting. There's supposed to be sound on here, I believe. There may not be. So I think maybe there's sound on this page now. So anyway, I put up there for those of you on the YouTube channel. Here's some basic information. You go to the kendallreport.com/wavetech. There's a video of me telling you a little bit about it. There's some sign up. We prorate things. We're at the 18th of the month. It's basically $3.12 a day. It costs you more to go to Starbucks. And there's a lot of ideas and things out there that you're going to be able to do to be able to make some money. It's not even one trade. For most people, it's one good trade a month, and you probably paid for a year. But the concept here is really getting this thing out so a lot of people can actually be able to scale their own businesses and build your own portfolios, your own mutual funds, and do some very high levels of quantitative type strategies that are going to get you ultimately to be able to protect assets when markets are going down. And I think I got rid of the echo now. So anyway, yeah. So yeah, thanks. So anyway, you guys get it. Thank you so much. I don't know what our unique visitors were, but I'm sure there were quite a few folks. And I just hope that we're trying to do our best job in facilitating this community. And I talked a little bit in the opening, using the feedback button to communicate to us. Send us emails if necessary, but that's probably going to be your best spot. It's right in the top area here in the quick links where you can go to feedback, and you can, I don't know if this thing's limited to how many characters you can put in it. I think you can put a fair amount. You can request symbols there. No penny stocks, please. Make sure they're real stocks. If you see something weird, bug reports, there's some of this stuff, portfolio reviews, stuff like that may not be appropriate. We'll see if any of that stuff comes in. But anyway, folks, thanks again for watching. Really appreciate it. And we shall see you tomorrow on another live stream. And we'll be doing all market stuff. Yep, we do every Tuesday. We're doing it. And we are going to be working on a Zoom only for advanced users. And I think that's definitely going to be a Zoom only. So as soon as I can get some time on the schedule to figure out when we can do that, that will be coming up next. And that will be by invitation only. And that'll be based on the number of clicks in the system. We can see not what you're doing, but we can see that you're doing. And that will determine, maybe the top 100 players or something in clicks. We can actually sort the database pretty easily and get to that level. So anyway, folks, thanks again for spending all the time watching, and we appreciate all the activity that we're getting and everything. And I'm glad everybody's doing. Yeah, Jay, Pacific. Yep, there you go. Jay, and tomorrow we're. By the way, just a brief announcement for those of you that are still hanging out. We got 160 on YouTube. Tomorrow, I'm going to talk about what I think is the next Buffett trade. I like taking advantage of Mr. Buffett screwing up, and I think the financials or the bank stocks may be at play. We'll see what plays out. We'll talk about that tomorrow. Anyway, folks, thanks for watching. We'll talk to you tomorrow. And actually, we'll see you tonight in the videos.